for most people, but could you just go over the math again of the $391?
Hey, Bill.
I'm the math guy. That's kind of scary.
That's in your press packet too. There's a chart in there, that's a color chart on the left-hand side. But, you know, I'm a journalist, so I used to be a journalist, so math is not my forte.
And can you reference in your answer with the 391 and 20? Can you reference what the 5% would mean?
Right, under the current law, which was repealed under House Bill 545, it's what we call the Payday Lending statute. It has two ways that people are charged for the loans. And it's based on an interest rate charge and a fee. Now when you put those together, that's the APR. The APR is defined under federal law, under the Federal Truth in Lending Act. And they're required to report the APR. In the new law, and I'll explain how that breaks down, but in the new law, it's a flat APR under the same definition as the federal level. So to do an apples-to-apples comparison, you should use the APR from the original statute, the old statute, and the APR from the new statute. The APR from the old statute on a typical 2-week loan is 391% APR. And there were actually testers that went out, Policy Matters Ohio sent out to check with the various payday lending operations in a couple of different cities, and they all charged the same. There was no variance in the rate. Now when you break down that 391%, it is $15 per 100. $5 comes from the rate, and $10 comes from the fee. You follow me? Taken together, that's the APR. So in reality, there's no way it can be true that this referendum, which brings back the 391% loans, would lower interest rates. The new law sets that at a strict cap of 28%. So anyone that represents this will lower rates, whether they say 1%, 5%, 15%, or whatever, is not telling the truth. And that's what the fundamental point of their referendum. They are repealing the repeal of the old statute, the payday lending statute.
I hate to display any math in public, but wouldn't $15 on $100 be 15%?
Not as an APR. I mean,
because what?
APR, those are 2-week loans. To do an APR, the reason that the federal government, through the Federal Truth in Lending Act, requires all these kinds of lenders, as well as credit card companies, as well as mortgage lenders, etc., to provide the APR is precisely so consumers could do an apples-to-apples comparison. You know, because we may say, well, we calculate our interest rate on a daily basis. We calculate it on a 2-week basis. We calculate it on a monthly basis. No matter what that is, they're all going to be different, widely different. So the easy way to look at it is there's 26 2-week periods in a year. Most people get paid every 2 weeks. These are payday loans. So multiply the 15 per 100 times 26, it gets very close to 391%. But it's not just our preference. This is required under federal law. The new state law is a strict APR calculation. And if voters are being asked to choose, do you want 391% or do you want 28%? That should be an apples-to-apples comparison as well. The 28% is what the new law provides.
Other questions?
So I understand the concerns when the petition gatherers say that this is going to lower the interest rates, but I also heard some concerns about folks just coming up and saying, would you like to save 6,000 jobs, sign here, and people would sign. But isn't it the signers' responsibility to ask some follow-up questions in that case? I mean, these gatherers are trying to gather signatures as fast as possible. If they're not issuing blatant false statements, isn't the public responsible for figuring out what's going on before they put their name down?
I mean, I would, if it were me. I do think people should be careful about what they sign. I think, you know, that would be a message that we would have to potential signers of this petition, is ask the questions, look at the information, as Jimmy did, to find out the answers. I think the 6,000 jobs argument is utter and complete nonsense. For those of you that were at the press conference with the governor and the president of the Senate and the speaker, they made it clear, and they revealed, I think for the first time, that the Department of Commerce has already gotten requests for applications for licenses from 1,000 or more of these payday lending outfits. There's only 1,600 of them in the state, and 1,000 of them have already applied to operate under some other kind of lending license in the state. That's before the new law takes effect. Are the pawn shops going to go away? Ask yourself. They're like cockroaches. They've survived anything. You know, the check cashing outlets, they've been around forever. They predated payday lending. They'll be here after this law takes effect. Rent-a-centers, they offer payday loans. They're not going to go away. This notion that there's 6,000 jobs on the table is at best a total exaggeration.
The 391 and the 28, that's apples to apples. What's the 5% that they're throwing in, and why is that not an apples to apples?
The 5% is only a portion of the charge that they, you know, I mean, to the consumer, what difference does it make? If you get a fee, you get an interest rate charge. That's only a small portion of the charge they're getting when they take out a payday loan under the current law.
You're saying the 5% is just that 5 out of the $15 per 100 that was charged under the old system.
Right.
That's the 5% they're throwing.
That is the 5. That is what they're referring
Is
to.
that inaccurate in the ballot language, or is that part of the clerk dispute?
The ballot language is yet to be decided. That'll be decided by the ballot board on Thursday.